If I told you that one tiny company could be about to change the energy industry forever and that it's trading for just $1, would you be intrigued? This little-known Aussie company says it's found a way to transform fossil fuels into clean energy. Think about that for a second. That's huge. Currently, this company is so small that hardly anyone knows about it, which is why its stock is still so cheap. And that means there's the potential for incredible returns if and when this company's tech goes mainstream. This clean energy breakthrough stock is just one of 7 promising Aussie companies on our radar at the moment. To get the full details on all of them, click the link below now.
G'day there, welcome to the closing bell on the 16th of October. Plenty to talk about today. I'm going to show you a couple of little stocks that I think are looking interesting at the end of the chat. One a little gold stock, a silver stock, and also one of those HPA hopefuls. But to start with, let's have a chat about the week. I mean, it's been a pretty interesting week as far as I'm concerned, with, of course, Evergrande in the background. Chinese credit markets seeing lots of selling pressure. We're seeing spreads widen quite dramatically from junk to AAA. But also we're seeing that happen in the US. I'm seeing that the junk yields over there starting to rise. So there's something happening in the big picture there. It's not just in China that we're seeing this widening of spreads in the credit market. So that's something to definitely keep tabs on, especially with next week finding out whether Evergrande will be in default. That could spark something. We're seeing other developers out there seeing their bonds sort of crash in the blink of an eye when they put their hands up and say, actually, we're in a little bit of trouble too. So that's a big thing to be thinking about. But also this week with the Fed coming out and saying taper is coming, and the CPI figures coming in quite hot. Now, for me, I've been saying that those US bonds, watch out, and we'll look at those in a second. Really, I would have expected the bonds would sell off with high inflation figures, knowing that taper's coming, the Fed's going to stop buying those assets, and we've got the big stimulus bill coming. I mean, everything to me saying those long end of the yield curve really should start selling off, and the bonds yield should spike higher. But that didn't happen. It went the opposite way. The yield curve flattened. And to me, that was quite remarkable. The short bonds, so the short interest rates, they went up in yield, but the 10 years went down in yield. So we want to have a look at that in the charts, and then how that affects gold, which I think could be setting up for a big blast off higher if a little chain reaction happens up through 1830. So I just want to show you those charts and finish up with a couple of stocks. So looking at this US 10-year bond yield chart, we can see the story that we've been looking at recently with the crash in yields over 2019, 2020, yields heading higher at a rate of knots up to around 1.8%. We've had yields falling back, and we were looking at the chance that this could break out above that 1.8 yield region. That's what I think could happen, above 1.8%, but it does actually need to get above there to really set off that chain reaction, and we're not there yet. And with the news coming out during the week, and bond yields were up above 1.6% when all of this news started happening. And you can see yields have dropped quite dramatically there, although not in a huge way, over the week, falling to, 1.52%. So they've dropped 10 basis points over the week, when I would have thought they would have gone the other way at a rate of knots. So that's definitely something that you need to have in the back of your mind as we move forward. So if we just quickly focus in on this range from after the COVID crash, the rise in yields from 0.3% to 1.8%, and you can see prices, or the yield fell back to that point of control, and now we've had that spike recently. but that's gone up into the sell zone of that wave. So this is a point where yields could actually drop quite dramatically from. And that's why I've been saying that I really need to see yields breaking out above that 1.8% region for this next wave higher. And look, that could be coming. This next few weeks is really important to watch what these bonds do. But the reason why I got quite excited and really went pretty hard into gold this week was the strange move in these bonds actually rallying from this point and yields dropping despite the fact they should really be taking off to the upside. If that continues, I reckon we see a pretty massive spike in gold prices, because basically the negative real yield is getting bigger and bigger as inflation takes off, up around 5.5%, bond yields yielding 1.5%. And if the bonds are going to rally further, that means the rates are going down while inflation is actually rising. So gold in that situation should blast off like a rocket. So let's have a look at gold. So this is the chart of gold on a monthly basis. We've got the rally over the last few years, and the last year and a half has been this corrective phase. And it's been pretty tough out there for gold stocks. A lot of them have been really absolutely smashed, even though they've got pretty good margins, and they're throwing off a lot of cash. So it is brewing as a pretty good opportunity. If I just focus in on the whole correction, so I'm just looking at that whole wave down from the all-time highs. That's pretty much all the trading that's been going on for the last 14 months. Anyone who's done any trading in the last 14 months, they have a position at one of these prices. That's why I'm looking at that whole range, looking at that point of control, the midpoint of that range, which is around 1875. And I have been saying to you recently, look, if it does bust below 1680, watch out. And that's still the case. But we haven't actually busted below that low. And all of the things that have happened have made me shift in this feeling of what's going to come with gold. But still, we break below 1680, watch out to the downside. But the way it's looking here, you can see that price action for the last sort of few months has been really bouncing off this buy zone of that range. You can see there's been lots of support in here. It's tried to sell off down through there, another wave of buying. And this most recent sell-off went down again. Where did it get to? Just to the bottom of the buy zone. And now we're setting up a weekly buy pivot out of that buy zone. So where this closes on Friday, I wouldn't be surprised if it had a good night last night, in fact, and that prices were even higher. That's what I would expect to happen. But we now have the weekly buy pivot out of the buy zone of the whole range of the last 14 months. If we bust out above that $1,830 region, it really should just spike straight back to that point of control. And really, that's just the beginning. This could be the beginning of a wave up towards that sell zone, which is up around 1980 to 2020. So that could be what's in our future. But the immediate future is that it's setting itself up nicely for a launch above that 1830 region straight to 1875. And I wouldn't be surprised to see that happening within a couple of weeks. So that means you're looking at gold stocks, which are pretty beaten up. Now, I went into 6 gold stocks. So obviously I can't tell you the name of those, but I do have one that I left out of my list, which you could keep an eye on. That is SBM, St. Barbara Limited. They are a $1 billion company. So let's have a look at this trading over the last 5 years. Had a massive wave up to the upside that you can see there, rallying from near nothing to a high of above $5. And we've seen this corrective phase over the last few years. And it really has been smashed down to around $1.50. And where has it pulled back to? You can see the buy zone of that whole wave coming in around here. And it has already had an attempted rally from this area, you can see. And where did that rally get snuffed out? Right at the sell zone of the wave. So we've had another wave down that's cleared out a heap of people. And another bounce from this buy zone, you're giving targets back to around 275 for starters. Now, it's not quite there yet. We don't have the monthly buy pivot, so I'd need to see really a monthly close above the high of the range there of $1.63. We get that, it's going to start looking pretty hot. And also that would mean it's having a false break of that low that it got to around the start of 2020. So sort of setting itself up to launch from this buy zone and have a bit of a mean reversion move back to that point of control. So SBM looking pretty interesting to me on that front. If you're interested in the little piddlers, and this is a little silver stock that is looking pretty interesting. It's trying to create a base after having quite a large correction. It is trending to the upside quite strongly. I like the fact that from the lows created in 2015, 2016, we've had two large corrections. So we've had the first wave, which has shaken everyone out. The second wave, which is trying to shake people out at the moment. And usually wherever this wave bases, that next wave should be quite a doozy to the upside. So it is looking interesting, but it's not quite there yet. No monthly buy pivot in place, but you can see it's finding support at that 20 months simple, monthly close above the 10-month exponential, creating the monthly buy pivot, and it should be off to the races again. But failing that, you're looking at this whole wave higher, and you're saying, look, if it managed to have a bit of a real shakeout down to that sort of 2 to 4 cent region, well, I think you'd be pretty happy to pick up some, but we may not see that. So that's a little piddler that, you might need to do a bit of work on to see if it fits your risk sort of parameters. And to finish off with, just noticed that one of the market darlings of the last year, ADN, sort of halloysite, kaolin, and ultimately HPA, high purity alumina hopeful. They have had a massive run, but they have corrected quite strongly over the last 6 months, like many stocks. Canaccord doing a large raising for them. That looks like that's done and dusted, and maybe the lid that was kept on it as a result of the raising has been cleared out. Finding some good buying support, and possibly shaping up to a monthly buy pivot this month, and also a close above that 10-month exponential moving average within the long-term uptrend. So, that one could be ready to have its next leg higher. If we look at the most recent wave higher from around 2 cents, you can see the buy zone of that coming in around that 12 cents, and it did nearly get there. So I'd say it's starting to look pretty good, one that you might be willing to grab a few on the back foot and keep buying a few if it does have another wave down to those lows. But yeah, that looks interesting to me. So pretty much that's it. A couple of stocks there for you to have a look at. And definitely keep an eye out on the Chinese credit markets next week. And how that US yield curve performs over the next week or two is going to be very important. If it continues to flatten, gold should rocket. All right, well, that's enough. If you're interested in finding out what I do, please check on the links. Click on those links below the video. Check it out. Hopefully, you'll become a member one day of my trading services, and you'll find out what those 6 stocks were. Other than that, I'll come back with more next week. Cheers.